Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 7th, 2025, and we're diving into Cencora's fiscal 2025 second quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cencora, a leading global pharmaceutical solutions organization, has just released its Q2 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Cencora reported a revenue of $75.5 billion for the second quarter, marking a 10.3% increase year over year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by an 11.4% increase in the U.S. healthcare solutions segment. This segment saw significant unit volume growth, particularly in products for diabetes and weight loss, as well as specialty products for physician practices and health systems.
And what about profitability? How did Cencora perform in terms of earnings per share?
Cencora reported an adjusted diluted EPS of $4.42, which is a 16.3% increase from the previous year. This figure not only surpasses the analyst's forecast of $4.08, but also reflects the company's strong operational performance and effective cost management.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Cencora's operating income increased by 15.3% year over year. What factors contributed to this improvement?
The increase in operating income is largely due to the growth in the U.S. healthcare solutions segment, which benefited from increased product sales and the acquisition of Retina Consultants of America. Additionally, the company has managed to keep operating expenses in check, which further bolstered their income.
Looking ahead, Cencora has raised its adjusted EPS guidance for fiscal 2025. What does this indicate about their future prospects?
The updated guidance range of $15.70 to $15.95 for adjusted EPS suggests confidence in continued earnings growth, particularly in the U.S. healthcare solutions segment. The declaration of a 55-cent per share dividend also reflects a commitment to returning value to shareholders.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the U.S. and international healthcare solutions segments fare this quarter?
The U.S. healthcare solutions segment reported a revenue of $68.3 billion, up 11.4% from last year, driven by strong market growth and strategic product sales. On the other hand, the international healthcare solutions segment saw a modest revenue increase of 0.7%, with some challenges in operating income due to lower performance in global specialty logistics and European distribution.
How is Cencora positioning itself strategically in the healthcare sector?
Cencora is focusing on enhancing its leadership in healthcare through a pharmaceutical-centric strategy, operational excellence, and a customer-focused approach. The acquisition of Retina Consultants of America is a strategic move to bolster their capabilities and market presence.
Financial health and risk management. John, let's talk about Cencora's financial health. What does the net income and interest expense tell us about their financial position?
Cencora's net income attributable to the company was $863 million, reflecting strong profitability. However, the interest expense increased to $104 million, primarily due to the issuance of $1.8 billion in senior notes and a $1.5 billion term loan to finance the RCA acquisition. This indicates a strategic use of debt to support growth initiatives.
And how is Cencora managing its tax obligations?
The adjusted effective tax rate for the quarter was 20.8%, slightly lower than the previous year. This reflects efficient tax management and the impact of various tax strategies implemented by the company.
Key takeaways. In summary, Cencora has delivered a strong performance in the second quarter of fiscal 2025, with impressive revenue growth and earnings that beat expectations. The company's strategic initiatives and operational efficiencies are paving the way for continued success. John, any final thoughts on Cencora's investment prospects?
Cencora's robust financial performance, strategic acquisitions, and strong market position make it an attractive investment. The raised EPS guidance and dividend declaration further enhance its appeal to investors looking for growth and income.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cencora's performance in the comments below. Until next time,